Inflation, housing, food, gas. The price of everything is skyrocketing while the stock market is plummeting. What is going on? CPI numbers coming out today much higher than expected. There's a lot of bad news to talk about right here in this video, so make sure you guys stay tuned. What's going on, guys? Patrick here, and well, the news today, the headline news is that inflation rose 8.6% in May, the highest since 1981. Stocks are not liking the news. The market's selling off, down 3-4% on the day right now. NASDAQ, this is the QQQ, from the 305 level yesterday down to the low right now at 289. If you look here at the bigger picture in terms of support, it looks like there's some support down here, 283, 280 level. If you look at the bigger picture here as the overall downtrend, where that puts us, I would say like 280, 276 for a possible area to bounce off of before heading lower. But in general, if you really think about the big picture here, I would say there's a good chance the NASDAQ can pull back all the way down here to the 260, 250 area as we continue to have bad news. It only takes a few more bad news articles for the market to get down to these lows. And you can see here on the SPY from the 400s down there to 390. I actually posted on StockTwits yesterday expecting this move. If the CPI numbers were not good, we would expect a move down there to the 390 level. And that's exactly where we are right now. I posted this on StockTwits yesterday, long before this move happened. And you can see we had this sideways momentum here in the market for quite some time. Yesterday, we just broke right through there. And that was a very, very big red flag that we would head lower, expecting the CPI numbers to be bad here. So the headline news today is that inflation rose 8.6% in May, the highest since 1981. The consumer price index rose 8.6% from a year ago, the highest increase since 1981. The core inflation, excluding food and energy, rose 6%. Both were higher than expecting. Surging food and gas energy prices all contributed to the gain, with fuel up over 100% in the past year. Shelter costs, which comprise about 1/3 of the CPI, rose at the fastest 12-month pace in 31 years. The rise in inflation meant workers lost more ground in May, with real wages declining 0.6% from April and 3% on a 12-month basis. So inflation is skyrocketing while the actual wages are going down here. Also, a little heads up, if you guys want to learn more about what's going on with the possible recession here in 2022, I'll put a link down below. You can download this free report. I'll put a link down below. You can read and learn more about what's going on. There's a couple of different reports for the recession, the housing bubble, and all of that stuff right now, talking about the interest rates and talking about inflation right here in this report to really dive in and learn more about what is going on. A lot of really useful information for investing and trying to figure out, should you be buying the dip or should you be waiting for more of a dip? Some of the biggest increases came in airfares that are up 12.6% on the month. Used cars and trucks up 1.8%, and dairy products up 2.9%. The vehicle costs have been considered a bellwether of inflation surge and have been falling for the past 3 months. So the increase is a potentially ominous sign, as used vehicle prices are up 16.1% over the past year. New vehicle prices rose 1% in May. A lot of people were hopeful. That the numbers would come out. We would at least be at the expectations, but we ended up breaking through those expectations. That's why the market ended up selling off there. So obviously, the CPI numbers were not good. They were higher than expected, but there's also bigger red flags with those numbers. And people wonder, like, why does it really matter? Inflation, blah, blah, blah. So when you start to think about the actual financials of the government, the Fed, and all of that, you really start to worry about this. There's 70 million Americans who are getting paid Social Security every month. With the CPI, with the inflation increase, they will now have to increase the amount of Social Security that is paid. So because of this, they're looking to increase the Social Security that is paid out. Now the government has to pay more money in Social Security because of inflation. The CPI numbers have a direct effect on many things, directly affecting the Social Security program here and the payments that are lining up. The government has to pay more money when they don't have more money to pay out. The second red flag with these CPI numbers is the Treasury payments on bonds. So the Wall Street Journal reported that there was nearly $15 billion worth of bonds sold in last November. That's about $6 billion more than the previous 20 years combined. That is obviously being caused because of inflation. And then, so what you're seeing with those first two red flags is now the government is paying out more money for Social Security and having to pay out more money on the bonds. When they sold $15 billion worth of bonds, now they have to obviously pay out on that, and the interest rates going up and things like that. And what's even more ironic or interesting about this is just recently one of the Feds, Loretta Mester, came out saying that they were on a clear path, that they were seeing a monthly increase on a downward trajectory on inflation. And then now this comes out. So obviously she was far off. And that's why I think the market really is selling off, because a lot of people were expecting that inflation the last few months, we're going to start to see some downward trajectory as people started to spend less. There was less money being spent around, but the actual numbers came out much higher than expected. So the Fed, the policymakers, they might have been wrong thinking that they were going to be able to handle inflation at this point. So the big question that everybody wants an answer to now is, are we heading into a recession? And obviously, we want to be bullish. Like, we want to think that the government's going to figure it out, that the USA is the greatest country in the world and we're going to figure it out. But I am fearful at this point. I know they say to be greedy when other people are fearful, but I am fearful that we're going to go much lower than we are now. The actual Fed at this point, they have to basically tighten to the point that they can get the price of the stock market, to get the price of goods to go back down, where people aren't spending tons and tons of money, to decrease the value, the inflation, right? They have to get the value of things to start to go back down. And the only way to do that is by tightening. And the only way to do that is by increasing interest rates so that people are less likely to want to spend their money and want to hold on to the money. And you want to basically stop the demand for things to go up so high, like the housing market, you like the vehicles, energy, and all these things. They want people to stop spending money so that the inflation can start to come back down. Because right now, people are just willing to go out and pay, hundreds and $300,000, $500,000 over asking on a house because they have so much cash and they wanted to spend, but they're not getting a return on that money sitting in a bank account. So inflation is running rampant. I think the 8% that they're saying were much higher than that. I've seen the cost of food, the cost of gas, everything just going skyrocketing right now. And I think 8% is a low ball number on the actual inflation and on the actual pricing goods there. So very interesting time we're living in. Are we heading into recession? It's 2022, 2023. It could be a massive recession. And I don't think it's going to be just a simple and easy recession. I think we really will, if we get down to those lows, if we get to a point where, people are starting to wonder, if people are barely getting by. Everybody got stimulus checks because of COVID, because of the pandemic. They ended up paying off some of their credit cards. We've seen an increase in credit card debt just recently, another big spike. The American populace has been able to pay off a lot of that credit, but now heading into this market that we're in, where you have the price of everything skyrocketing, the price of housing, everything is skyrocketing to the point where people are just going to be priced out of the market. Like, if you don't make $1 million a year, how can you ever afford, $1 million house? When all these houses, like in Hawaii right now, there's houses everywhere. I mean, every single house is $1 million. And a lot of these people that are having to buy these houses are nowhere near making $1 million a year to pay for that house. So you have this huge imbalance between the middle class and the lower class now, who just don't have the money to actually live and pay their bills. And they're going to get to a point where they're like, screw it. If I can't pay my bills and I'm going to work every single day, well, what's the point? Why do I keep going to work, right? Why do I keep going to work if I can't get by either way? If I work 40 hours a week, making the amount of money that I make working at a restaurant or wherever, and I still can't pay my bills, I can't afford to live, I can't afford gas, I can't afford food, then what's the point? So we get to a point where there's like a tipping point where people are just fed up and they get over it. They're tired. You get the lower class, the middle class, obviously the upper class, the rich of America, that's the smallest percentage. And then you have the lower class, the middle class being the largest percentage of America. And you get to a point where those people are just fed up and they're tired. And it could really cause a lot of issues, socially and financially for a lot of people and businesses that are out there. So it'll be very interesting to see what the Fed does next week. The FOMC meeting next week, they're going to be talking more numbers. We should see some really amazing action in the market. If you guys haven't been trading futures, There's been some really good opportunities. We've been live on YouTube pretty much all week long. So if you guys haven't already subscribed and hit the like button, you know what to do.
Yeah.